our weekly webinars. I do apologize for having to cancel last week. I had a situation. My dad actually had surgery, so it was definitely more important for me to be there than to talk about the ever-giving PPACA law. So let's get started. We have a little bit to talk about today. Just as a reminder, the FFM certification is now available. It's been available since, I believe, July 1st. And if you have sold or certified in 2014, then you do need to certify for 15 in order to get commissions. It's very similar to the Medicare Advantage plans where you have to certify and maintain that certification for policy sold in order to continue to get compensated. And the termination of the 2014 certification is set for September 30th. Now, if you certify for 15 before that, and I hope you do, then the 2015 certifications will carry you through for the balance of 2014 and into 2015. So again, if you need help certifying, we are running certification support sessions in which you can just come in here to URL and sit in front of a computer and get the certifications done, or you can certainly do it on your own. So I just encourage you to certify if you have that need. And I imagine since you're on the call, you do have that need. So go ahead and certify. Also, as a reminder, Health America One and Aetna are offering grandmothered provisions for October, November, and December renewals. That means that when they come up for renewal in October, they will be able to keep their non-PPACA plan, and there is not a qualifying event. The plans, the grandmothering, will last until 12/31, at which time your client will have to make a decision for 2015 coverage for 1/1/15. So just keep that in mind. Not a qualifying event, but they will only have coverage through the end of the year for the grandmothering. Also, CMS has devised a new newsletter that's going to be coming out. I believe the last newsletter was included in last week's healthcare reform newsletter, and it is specific to the marketplace and items that you would need to know on healthcare.gov. So, again, I don't know how useful it will be, but it will be included in my newsletter periodically when we receive it. Big bullet, the 12/1 early renewals. Most groups, as you probably know, took an early renewal last year for 12/1. Well, we do have the Highmark 12/1 renewals. They're going to be getting out this week, most likely this afternoon or tomorrow. And we will have Health America 12/1 renewals next week sometime. So just keep in mind that for these early renewals, your clients, your group clients, are going to be given the opportunity to keep their same non-ACA plan. Just reset deductible, have a rate increase. They can choose to switch to a different non-ACA plan within the same family, qualified health plan or PPO or HMO. So they can change up the plans, but they can't, if they don't have a qualified health plan in place now, they can't choose on their renewal a non-ACA, HSA, or qualified health plan. It has to stay within the same family of plans. And of course, last but not least, they would have an ACA option for 12/1. So there are a lot of choices that your employer clients are going to have to make. I would say just let you know that we're here to help. There are a lot of options. Not every group has the same needs. I do think that not only the non-ACA family of plans or current plans or ACA plans need to be explored, but Additionally, individual insurance has to be explored because if you're not doing it, somebody else is going to do it. And I also believe ancillary products should be part of that renewal strategy. So just please know that we're here to help, and we're going to try to make this as seamless and as, you know, as easy as possible for you. So just be aware that the fun is beginning this week. Which brings up another topic. With groups dissolving coverage, employers dissolving group health coverage, and there are a lot out there that are doing that, and we're not advocating one way or the other because it is a personalized decision, but there's been a lot of talk, and there have actually been some organizations that are promoting employer-sponsored individual health premiums through HRAs or FSAs, and this has been widely debated, and there are a few rogue TPAs out there that are really promoting this product, or this process. But there was a release from and I can tell you in a second, from the Employers Council on Flexible Compensation, and just to reiterate, this makes it pretty clear that employers cannot pay for individual health premiums for their employees, pre-tax, post-tax, nothing. What an employer can do if they want to mitigate that additional cost is increase their salary. And of course, they can increase salary, but it can't be, we're increasing salary if you get insurance, and if you don't, we're not increasing salary. It can't really be like that. It really just has to be, here's a stipend, you do what you want, we encourage you to get individual insurance. So this article, supplied by our partners PrimePay, is going to be in the newsletter that's coming out either this afternoon or tomorrow, and it's under the worth reading section. So I would encourage you to just maybe even print this out and use it as a guide, because I know that employers are out there saying, well, XYZ company is saying that we can do this, and the fine is pretty steep. It's $100 a day. I'm trying to get to it. It's $100 per employee per day, excise tax if you're found to be doing this, or your employers are found to be doing this, or $36,500 per employee per year. So that's pretty significant excise tax. So again, I'm just letting you know that it's in your best interest to make yourself aware of this and not fall into the category of buying into any workarounds that are out there. The web broker contract, as many of you know that have been listening for the last year, we are an approved web broker. We are working with EBIX and building that platform so that it will be available on November 15th. We're working with carriers and EBIX together and trying to get that information earlier for the 15 plan so we can really hit the ground running on November 15th when the open enrollment for 2015 starts. We do have a secondary option that a platform that we actually just purchased. So just it may be a solution for everyone, and just be mindful that we're going to be using it and testing it out. So if you do have a client that has a qualifying event and you want help with enrollment, it would be a favor to me if we can do that maybe together using this platform to see you know, really how beneficial it's going to be. And you know, again, we're in the testing phase, but we expect to have this available rather shortly, and definitely as an option. So that brings us up to the conclusion of the webinar and the open forum. If you are new or don't know how to type in the questions, certainly go to your question tab and type in a question. I'll read them out loud so that we all can learn together. If you don't have any questions, and it doesn't appear that we do, then you know, so be it. That's a good sign, I guess. We're all either totally exhausted or very well informed. As a reminder, next webinar is Thursday, September 4th at 9:30, And again, I really appreciate everyone joining in. And looks like questions are coming in. So questions are coming. Okay. So, and it does look like there is one hand raised for Stu. I'm going to unmute you, Stu. Stu, can you hear me? Stu? Okay, well, looks like he maybe had his question answered. And Sharon says, can you go over the Health America One and Aetna renewals again, please? Absolutely. For Health America One and Aetna, the renewals that are occurring for 10-1, 11-1, and 12-1, they are being offered grandmothering provisions. So that means upon their renewal, they can keep their plan that they have, their non-ACA plan. They will have a deductible reset, and they will have a rate increase. But the plans can be kept until 12/31. So that means that's not a qualifying event, and unfortunately, they're pretty much stuck with these plans, good, bad, or indifferent, until the end of the year, in which, you know, when the open enrollment period starts, you can write them for 1/1 on another carrier. So I hope that made sense. Sharon, if you have additional questions, just let me know. Rhonda says, if someone qualified for the exchange in 14, do we have to reapply for the tax credits for them for 15, or does it just carry over if no changes in income? And that's a really good question, Rhonda, and a good reminder for me. It really depends on the information that was input into healthcare.gov. There is a section, if you recall, where it asks if the insured or the consumer will allow the IRS to have access to their taxes, and I think it goes up to 5 years. If you chose anything other than 1 year, then that income is going to automatically be pooled. We're still a little unclear on what the actual renewal process will be, and I think that's really going to be based, too, on the carrier and what plans they're keeping, what new plans are coming in. So, you know, keep watching for more of that. But, you know, essentially, if they need to update their income because they only put in that the IRS could access the tax records for a year, then they would have to go back in and update their income information. Nate says, do you have any information about if, when individual plan designs will be coming for 15? Will we get plans in advance like MAPD, or be blindsided on 11/15 like the rest of the country? Nate, unfortunately, I think we're going to hear about them on 11/15. We have a couple seminars and webinars planned for carriers to introduce their products, but again, I don't know that they're going to be able to talk specifically about products until 11/15. So I would prepare for 11/15. Dina says that she was told that is a qualifying event, and I assume that you mean the Health America One and Aetna renewals for 10/1, 11/1, and 12/1. If they're being offered grandmothering provisions, being offered to keep the same plan, that is not a qualifying event. So I'm not sure who told you that, Dina, but from everything that I know, that's incorrect. Let me see. James says, are you saying that no employers can help employees get individual coverage? No employers can pay for individual health premiums. It's against the DOL and IRS statutes that came out September of 13, May of 14, and were just further clarified recently. So it is prohibited and could bring in quite a hefty tax. And Renee says, any deductible reset, any chance they will give credit for applicants in October or November? I don't believe so, Renee, but that's a good question to ask. I doubt it, pardon me, but I will ask and I will let you know. And Jesse says, is the 2015 Federal Poverty Guideline available? It is not. I don't have access to that. It may be out there in the internet world, but I don't have access to it at this point. And okay, yeah, Dina says she has proof that it's a qualifying event. Dina, if you could send that to me, I'd appreciate it. It should not be a qualifying event. It's not been a qualifying event up to this point. If the grandmothered provisions were allowed, it's not. If you keep your plan or have the ability to keep the same plan that you have, it's not a qualifying event. I don't know how it could be. So yeah, send me what you have, Dina. I'd certainly be happy to look at that. And Jay Suckup says, what is the process for domestic violence on medical coverage if it is not a life-changing event for coverage? I believe there is a provision in, and let's go to healthcare.gov, because there's a provision for women that are victims of domestic abuse that allow them certain exemptions, but I think it's just the exemption from the penalty, the tax penalty for individual. Let me see. Okay, let's see here. Victims of domestic abuse. You're a victim of domestic abuse and weren't previously allowed to enroll and receive advance payments or premium tax credit separately from your spouse. You'll be able to do so now. So that's the qualifying event. If they are victims of domestic abuse and you were previously not allowed to enroll or receive the payments separately from your spouse, then you'll be able to do that. So that's the qualifying event. And let's see here. A lot of questions today. That's a good thing. Barry says, isn't the violation for employer reimbursement only if they offer it on a pre-tax basis? Post-tax reimbursement is legal, correct? And no, it is not. An employer cannot participate in premiums for individual health insurance. Post or pre, doesn't matter. Cannot do it. That's it. Those are all the questions that we had today. So again, I really appreciate the time. Looks like we have some follow-up, and I will make sure to follow up with any of these questions and clarifications on next week's event. So again, I thank you all for joining. Oh, wait, there's one more. Has there been any discussion concerning having agency fault as approved representatives with healthcare.gov? Clients expect us to be able to help, and right now calling healthcare.gov without the client sitting next to us is useless, and there is no way to add approved representatives during the application process. There is discussion. I just don't know that that's been resolved. There's some discussion on that, but again, that's probably low on the totem pole for issues. And Barry says about there's an evict. Oh, will your evict system connect to healthcare.gov to offer subsidies? Absolutely. Our web broker will allow you, our web broker capability and contract will allow you to log in, do off-exchange quotes, and do on-exchange quotes where you can look at your subsidy, and then it redirects directly to the healthcare.gov interface. The beauty of it is that it eliminates some of the identity proofing questions as well, and you're hooked in, you're hard-coded into that that redirect. So it's a good thing when it's available. So that looks like finally all the questions. Again, thanks so much for your participation. This helps all of us as a cohesive unit to battle this law together and really benefit from it. So thank you again, everyone, and have a great day and certainly a wonderful holiday weekend. Bye-bye.